So next up, we are very happy to bring on stage Bitget, one of our key sponsors. So I'm very happy to move the conversation forward. Thank you very much.
Thanks for having me, and thanks, Marco, for an interesting presentation, because as Bitget, we invested almost $30 million to Ton ecosystem, and I think that's a very promising venture building tool in the modern day, especially onboarding the next billion users. But today I wanted to talk more about bigger picture and economics, especially in what's happening in today's world. I think we all are curious where we are going, especially with the new legislation in US allowing stable tokens and many other things. While in a crypto industry, we are kind of always talking about CeFi and DeFi. We are kind of trying to compete and build a better product within the ecosystem. Today, we have to kind of look forward and understand that moving fast forward, we are not only competing within the same ecosystem of crypto, but actually there's a bigger players like institutions and huge banks coming into the picture, which makes actually this venture building idea very hard and difficult, because now it is no more about 3 trillion small market and I don't know, a couple of million users that we compete for, but it's actually about large banks being able to offer crypto solutions to their millions and millions of the users. And I want to discuss what exchanges do better, or how we can build a better ventures and compete with the banks. But before we go there, I wanted to show you this beautiful chart. It is the first time that Bitcoin and entire crypto market is decoupling. And when we talk about decoupling, it shows that there is no more sharp correlation between how crypto market is going hand to hand with the stock market and S&P 500. And there's a big reason for this, especially since the institutions, BlackRock and many others joined. Actually, these big institutions use Bitcoin as a hedging tool in order to balance your risk with the traditional asset market, and this makes a Bitcoin a very important investment vehicle. And when we talk about all the decoupling, I think very important factor, especially most of us today follow the news, and one day we wake up with another war happening, and another day the pandemic. While in the beginning we all were thinking that crypto is too risky, too volatile, in the first half of this year, we actually saw that a single launch of Chinese AI can bring the Nvidia stocks very down and can make entire tech market go down. Eventually, a single tweet by the American president can crush everything almost there. And this volatility is almost as big and as insecure as the crypto markets today. Therefore, we saw a lot of shift from moving traditional asset market to the crypto market today. This is one important factor to understand, and this decoupling shows that there will be more and more institutions coming and trying to take a bigger portion of the market. But it doesn't stop there. When we look at this very key important statistics, we show that almost 60% of the traditional bank users, you, me, and everyone in this room, if there's an interesting product offered by another bank, we are able to switch. But it doesn't stop in the bank. We are able to switch between exchanges. We are able to switch between centralized tool to the decentralized tool, vice versa. This numbers looks very different and very scary for a bank, because from the bank perspective, they have a higher chance to lose their customers. But also as a crypto native, there's a higher chance that we will be using, or we will be losing our users to the banks if they offer the right products. While this number is very scary for both parties, it's very important to understand how we can build a better tool in order to be able to compete and give a better solution to every user out there. While I was talking about banks, and I'm trying to put the banks into this big picture, I want you to pay attention how much banks are already trying to implement crypto or blockchain technologies. JP Morgan's and many others have been doing it for years, even though they kind of always were against the market. And there is a very funny story that a couple of years ago, actually JP Morgan CEO made an announcement that he will never allow any of his trading desk team members to touch Bitcoin or digital assets, which caused 20% price drop of a Bitcoin. Eventually, the next 2 weeks, the biggest scooper of the market were Morgan Stanley and JP Morgan as a bank, because they were buying and stocking Bitcoin. This can look as a funny story, but when we kind of zoom in, we also understand that how much these big institutions hold in a power. We know that today MicroStrategy continuously buys a Bitcoin, but if at some point they just put a simple announcement that they will stop buying or they start selling, market will literally crash at least 20%, and the next day they can go and buy more, which is, in my opinion, while we talk about these traditional big institutions coming, and we are very happy for them because it brings money, liquidity, and many other things, but we also should understand that we gonna lose in a long term if we keep them coming and taking the entire market. And especially in this room, there are so many builders and developers who work tirelessly, and if tomorrow the bank comes and just replicates what we do, it will be a disaster for us, and I think it will be an unfair game. Therefore, we have to be always very suspicious about what they're gonna do next and how much power they hold in their hands. But still, we have a huge advantage as an banks versus crypto exchanges or any tool. And why I'll talk about crypto exchanges here, I don't only mean centralized exchange, even though I work for one, but all the exchanges, the centralized world comes here. Of course, speed is the important factor, the cost, the access, transparency, and inclusion. Inclusion is, I believe, the biggest portion of this debate, because banks are not much interested in onboarding anyone or majority, because in most of the countries, in order to have a bank account, you have to have a minimum balance. In many places, you have to show proof of address, and it's in 7 rounds of hell. But with crypto, we are much liberal, and we enable more people to have a direct access to the financial system. And the cost is, of course, the most important point, because banks been charging and charging and getting on top, and all these hidden fees out there and here, while in crypto we are much more transparent. While I was talking all these differences and how banks kind of embracing crypto and what it shows as a challenge, back in 2018 when we first tried to start an exchange, it came from this idea of how banks are different, because at that point I exited from my first startup and I had a couple of dollars in the bank, and my bank was giving me super hard time. First I need to prove this is my money, pay taxes every time I wanted to do some transfer. I needed to hire lawyers, and it was so difficult and tiring and losing a lot of money in the process that at some point I decided to debank myself and put most of my assets into crypto in order to be able to have what is mine and use it whenever I want. And from this idea, we wanted to depart and build a tool where we can literally empower everyone to own what they own, and they can do whatever they want. Today, we stand strong by serving 120 million users globally. We move $20 billion every day. This year, we already moved around $3 trillion, which is almost the size of the entire crypto market cap. And we are the #1 copy trading platform, and we have a huge safety and security net out there that I'm going to talk about it. And all these numbers make us much different than a traditional bank. First of all, we are able, through the Merkle tree, to present the proof of reserves. And as an exchange, we promise that we will always have at least 130% of all the assets, which means if 120 million users of us decide to take all their digital assets away from the exchange, we will still have 30% more assets remaining. And why it is important? Because I believe whoever been to crypto a couple of years, we all know what happened to FTX, and that is the exact reason we presented proof of reserves, and we've been continuously publishing our proof of reserves in every month in last 3-4 years, to show our customers that we never touch their funds. You know what's funny? No bank in the world actually does it. We never know that how much these banks have of our assets. We know what happened in US with the banking crisis, because all the banks has to do is work with the central bank, and they kind of work in a black box. And as a user, you never know. And especially if you ever needed a cash, it's very hard to get it from the bank. I know that in Australia today, more than 200 euros, you have to pay commission. In UAE, where I live, if you want to take, I don't know, $10,000-$20,000, you have to call the bank in advance and tell them to prepare the cash, because most of the time banks even don't hold these assets. While as a crypto exchange, everything happens instantly. And I believe that is one important key factor that as an exchange we can always beat in the speed and also in transparency. Second of all is the protection fund. As an exchange, we promise to hold our protection fund around 300 million level. Today, our protection fund is the second largest in the industry with $650 million dollar capacity, because mainly it's based off bitcoins. We have 6,500 bitcoins in open wallets that users can check. And what it means, you guys probably remember, because it wasn't long ago when Bybit got hacked, and Bitget was one of the exchanges that jumped in with 40,000 Ethereum. We loaned them Ethereums in order they can serve their customers better. And I believe Bitget and Bybit, kind of this problem-solving duo, gives a great example what as an exchanges we can do much different than banks, and how we can win over. Because as I mentioned, banks kind of always depend on a central bank, and when a bank goes down, the other bank comes and buys it for a cheaper price. While as an exchange, as a crypto industry, we don't have that central governing body. We don't have a government to come pay us or bail us out. Therefore, we need to take care of each other. And in my opinion, it was the only kind of isolated case of in a modern history where a financial institution actually came and saved a competitor instead of coming and buying and taking their customers out. If we keep doing this good job, I believe we will be able to compete with the banks directly and to compete in a very different way that they are used to. But innovation also is very important. As an exchange today, we are offering a lot of services that kind of replicates the banks, but does much better, much faster, and much cheaper. And we cater to all the needs from decentralized through our wallet to the investment arm through our venture capital fund. And when we built these ventures, I believe in like 2-3 years ago, I always said that when journalists ask me what is the possibility of the exchanges becoming in next 4 years, like how they're gonna change, I was always telling that probably they will become like a bank-like organization. But today we see that more of banks are becoming exchange-like an organization, because if you open your digital bank today, you'll be able to invest into crypto through the neobanks, you'll be able to buy stocks, and you'll be able to do so many things, because at the end of the day, the user is important, and what user want to do, the banks can bring in them. And Marco was explaining a very important thing about his Telegram mini apps, that what Telegram mini apps wins, same the WeChat wins, because user is already there, they don't have to register, and they can just with a single tap open a new trade, open a new mini app, do whatever they want. Similarly, the banks think of you as not as a customer, but as a user whom they can service in a single tap. But when we look at the services we offer, they're much more different than the traditional bank, because as a crypto exchange, if you go from today to any decentralized or centralized exchange, most the focus, especially since the beginning, was on the trading and on the earning aspect of the crypto. For me, especially, I come from a media background, and most of these stories about the crypto was about a guy who invested $100, became rich overnight. Unfortunately, for the many years, the narrative never changed, and it was always about opening a trade, and making more money through the trading. Yes, definitely trade is important. It's bread and butter of any ecosystem. And that's how we are actually winning in the trade arm, because crypto is still a place where you can make 5 to 10x return on investment in your trades. While if you open your banking app today, you buy, I don't know, Tesla stocks and so on, probably you'll not be even seeing the double-digit growth. For me, I sometimes do trade, and I always say in the trading arm, your first goal is to kind of beat inflation. Your second goal is actually beat S&P 500. If you are really good, you beat the real estate market of London or Hong Kong in your return on investment. And lastly, you have to if you are a great trader, then good luck beating Bitcoin. If you are able to beat the Bitcoin, then you are a great trader and you know how to make money. We are the first exchange to actually offer USDT-based futures market. Today we have more than 500 pairs, which makes us a very strong place. We also offer USDC futures market. But again, trade is very important, and what you do with this margin and taking risk is very important. But as an exchange today, we offer the best earn rate comparing to any bank or any exchange, both for the fixed income and also both for the structured products. Because as an exchange, you are very agile. We can move fast. We can actually profile our users based on their behavior in different categories, which makes us or enables us to offer a better product and better services. But while I was talking about the possibilities to earn and then to invest, if you want to save, if you want to put into different earn arms, one of the biggest things, in my opinion, next 3 years we're all going to talk is actually onboarding user not to trade, but to pay. Because every payment is a transaction, and this is the most powerful aspect. The same way when we tap, we don't know how Apple Pay works, but it fixes our problem. Soon, crypto will become a next payment option. And why it is very important to have a next payment? Because today, whenever we transact with our MasterCard, Visa card, or Amex, the merchant actually pays anywhere between 1.5 to 3% commission to the card issuer, processing bank, and so on. But on top of this, the average merchant waits around 15 to 30 days to actually get the payment. While with crypto, we can slash this number to almost 1% of the entire money, or 99% discount in the speed. And also we can make it instantly. And why it is very important for us as a Bitget? Because we serve 120 million users, but today we are also onboarding hundreds of merchants across the world to come and accept a very easy way of a payment. And every payment is actually a transaction or a trade that you make, enabling you to fully live on chain without the need of going off ramping or putting the paper or fiat money to your bank account. While the direct crypto transaction is very important, we also understand that not all merchants are accepting. And the idea of Bitget Pay actually was born after we tested with the Bitget card, which is your crypto denominated card, enabling you to use all your stable tokens like USDTs in any transaction, because the cards are based on a MasterCard or Visa card system, enabling you literally tap and go like any other bank without actually the need of going through your bank system or converting to the fiat money. While we tested the card in many markets, we saw that there's a huge interest from the people to actually have this opportunity to spend your crypto without needing to the off-ramp. And we saw that more our users are spending in terms of the amount of the transaction they do than the trades they open. And not many users are interested actually in opening a trade. They are mainly interested in principal guarantees, guaranteed products, or they are interested in a similar way that presenters before me explained. If they are investing dollar cost average to Bitcoin, they don't want to sell their Bitcoins, but they actually invest the Bitcoin and loan against it, and they literally pay never because Bitcoin prices go up, and eventually they're able to spend that money through their card. Definitely, when we talked about the banks and comparison, the private banking or being a VIP customer of a bank is some great feeling whenever you have someone you can directly call to, I don't know, prepare your cash or solve your problems. Similarly, that product is available also at Bitget. With different levels of the VIP, you are able to get so many offers from the investing to the project and tokens that's not in the market yet, or able to get a faster loans and in a bigger sum. I believe today at Bitget you can almost borrow about 80 to 90% of your entire digital assets value. But as a centralized exchange, we are also trying to not become a bank, because we believe that future is decentralized. And our investment to Bitget Wallet actually started 3 years ago in the middle of the bear market, when we decided to invest $30 million and build the next decentralized wallet. Everyone literally thought that we are crazy, because at that point the market was going down. People were literally cutting off their workforce while we were actively investing into this wallet. But fast forward today, we surpassed both Trust and MetaMask wallet in monthly downloads. We are proudly saying that the world's most beloved crypto wallet. We serve around 80 million users. We have 500,000 projects listed, or being able, you can trade them or swap them, and we move around $12 billion. While as a bank, you are kind of forced to put all your ecosystem into one basket. As an exchange, you are able to offer products that are mutually exclusive and solving different problems in different ways. And you can breach them if you need, but you don't have to breach them either. While with the banks, if you have a certain bank account on your name, it means every action you do is traced within that ecosystem. While, for example, at Bitget, you can use a centralized exchange for your certain centralized needs. And then you are able to use the centralized self-custody wallet where we don't know who you are, we don't KYC you, and then you can facilitate your independence. And we don't breach these transactions either. Another key factor what makes us much different than the banks is that we are able to tokenize our entire ecosystem. I know that today more and more banks are trying to use their own issued stable tokens to tokenize their assets. But our tokenization is much different because we are able to build our own utility within our ecosystems. Unfortunately, banks will not be able to do it because they're dependent on the central banks and they're not able to issue their own tokens. Therefore, they will be always relying on the central bank issued money or probably the stable tokens that's backed by governments, while we are able to be much more agile. And this agility shows that we were able to grow 100x since we launched, and we had an all-time high at 8.5 US dollars. This empowers all our users, is actually giving back to the community, because whoever believed in our success and wanted to invest in our venture building actually got their fair share back. And Bitget's BGB token holders, and we recently just did an analysis, 96% of all the BGB wallet holders are in profit, which makes BGB one of the easiest ways to invest and participate in our ecosystem and help our users to actually gain their power back and grow together with us. While with the banks, unfortunately, you'll not be able to doing that, which makes us in a better place than any bank. And lastly, I wanted to just give a shout out to all the participants. We are partnering with La Liga, the Spanish league. And if you are keen about football, you can definitely come and visit our booth. And I think this is one thing that we are exactly doing same as the banks do, because sports been always a great tool for the financial institutions. As an exchange, we are still working with the large entertainment and sponsorship deals with La Liga, MotoGP, and many others, because today I believe crypto is no more a niche. It is kind of a household name. Everyone is able to use, especially since the news that's happening in US. Therefore, I want just to wrap up my speech telling that we are not sure in the future banks will become like an exchanges or exchanges will become like a bank, but definitely we have to keep innovating that we don't lose our fair share of the market. And I believe that institutions and having institutions in our industry is very, very important. But also we shall not forget that the initial ethos and idea of Satoshi's white paper was about peer-to-peer transactions. And if we let institutions just scoop Bitcoins and digital assets from the market, we will not be ending up in a great place. We will be ending up in the same centralized finance that we already had. And why to replace one ecosystem with the exactly same replica? Therefore, let's keep building and let's making sure that we keep the crypto power in the heads of the crypto heads. Thank you.
Thank you very much. Are there questions for Bitget?
I see some hands there.
Okay, great. I'm coming.
Sir, what will exchanges or banks offer in terms of crypto services that are in 5 years that are not offered today? What new thing should we be building? What new thing is going to come? Or is everything already built? Thank you.
I don't think everything is built. I think as a crypto natives, we should first try to offer a better alternative to the legacy tools. For example, I live in the Middle East, and in Middle East there's a lot of workers from different countries that they come and work. And that actually makes a crypto adoption very fast in these regions, because if you are someone who earns, I don't know, $500 a month and you want to send that $500 back to Philippines, paying $50 as a commission fee to Western Union is a huge loss. And that's why you will be definitely wanting to go and do it through some OTC desk here and there, because your transaction cost will be only $1. Therefore, in next 5 years, if you are able to build a similar system like a Western Union that can replace Western Union, be faster and cheaper through the cross-border transactions, then it will be a winning tool. While in parallel, we also have to understand that if we challenge Western Union, there will be a higher chance that they will adopt blockchain and they will try to innovate in order to be faster and cheaper to compete with us. And it will be going kind of both ways until we offer a better solution to all the users. And that was the historic evidence why like all the banks and major players were against the crypto, tried to block it through the legislation and lobbying, because they knew that the crypto is a cheaper alternative. And if you offer a cheaper alternative, there will be a huge need. Another important tool, I believe, as I mentioned, is the payments, enabling merchants to accept and have solve their cash flow issue. Because if you are running a small coffee shop here in Milan, definitely you don't want to wait 15 to 30 days to get the money back in order to go and buy more coffee or pay the salaries. While with instant payments, you don't have to much care about your long-term cash flow issues or being always in the debt. While also, I believe that what is the biggest thing we have to do in crypto is to have a better alternative into the loaning and mortgages and all this big money, or loaning into the large corporations, because today almost 90% of all the crypto loans are based on the digital collateral. You have to put something in order to get, while in the most of the banks, your credit history, your ability to buy and to spend also defines how much you can borrow against. That is one key point that we as an industry need to fix. I believe there are so many other innovative options that we can definitely discuss, but I think these three key directions, like international cross-border transaction is very important to fix, payment gateways and payment solution is important to fix, and also, as I mentioned, it's very important to look into all the other opportunities. And lastly, I'm sure some of you always thought about it. For example, subscription services like a Netflix, where you have to put your credit card and then they can immediately take the money every month. Unfortunately, for example, with crypto, it is not as simple. It's a good thing, but it's also another bad thing. Maybe someone coming up with next opportunity that you can automate the payments and be able to withdraw money from someone else's wallet when they subscribe to a service could be a good innovation.
Do we have another question? Yeah.
So, do you expand globally, like evenly in Asia? Because I'm from Vietnam, and as far as I know, Vietnam is one of the top places where lots of crypto tradings happens. But the problem is the regulation is not well defined. So, what is your strategy in those kind of markets and regions?
It's a very good question, and I actually love Vietnam. I go to Vietnam like 6 times a year, because as we own a separate entity, separate exchange in Vietnam, due to the legislation, and I actually advise the Vietnamese government also in building the legal frame. In my opinion, our distribution of the 120 million users, it's less or more evenly across the globe, because that was our initial strategy. We don't want to focus or put all our eggs in one apple as a diversification strategy, because with the legislation, we always have an uncertainty. While when it comes to Vietnam, I think it's a great market both for the gaming market and also the copy trading market, for example, from our perspective. And what makes Vietnam and Southeast Asia a very interesting specific market, it's about the disposable income of the people. And if you look, for example, at the trades are taken in Southeast Asia, we'll see that a lot of people take 20, 30x margin leverage trades, because people want to get rich faster or change their life, and they are more prone to take a bigger risk for a bigger reward. While we look in Europe, for example, people are prone to more on a stable in transactions that are based on a stable tokens, like a principal guaranteed. We have a launch pool on Bitget where you can, for example, lock your USDT or BTC for a certain time, like 7 days, and in return you will get a new project's tokens completely for free. It's more of like a farming methodology, and we see that more and more people in Europe use this, because in Europe people they have a disposable income, but they're not interested in taking like a 30x leverage trades. But when we go to Latin America, or let's say Turkey, Venezuela, Argentina, more and more people use actually stable tokens because they don't have an access to foreign exchange, or their banking system is not good, or their national currency is losing value in a much faster rate than anywhere else. For example, in Turkey, annual inflation rate is around 90%. Therefore, holding your salary in USDT, and every day whenever you need to buy something, exchanging into the local currency makes you more money. And with all these three things coming together, the user behavior, legislation in place, and why people use crypto, actually we can kind of map out the world and build a product that kind of caters to each need, rather than thinking that, oh, someone is a crypto user, they should definitely, I don't know, do dollar cost average, they should definitely trade. That is not a pattern we see. Nevertheless, we are trying to build as many products for each niche or each audience as possible.
Do we have one last question? Okay.
Your speech was amazing, thank you. I have a question. I really think that totally abstracting the complexity for final users, like they actually use chain stuff, but they don't know, is a great value because you basically simplify everything. I would be curious to know your take here.
That's very important, because the same way we don't know how bank works and how Swift works, therefore, in my opinion, end user should not necessarily know how things work, and things should be easy. Because I remember when I first time opened a wallet for my parents, my family lives in Turkey, and they needed that wallet in order I could send them USDT, or they could transfer their money into the USDT. And when first time my parents actually went to the OTC desk to send the money, it was very hard for them to understand why they can't just send USDT and the transaction fee can be taken from that money. Instead, they had to go and buy more Trons and then do that transaction. It is a useless hurdle, and what made, for example, Bitget Wallet successful is we actually implemented a tool that enables you that you can do the transaction, and transaction fee will be taken from the principal amount, and you don't have to have a secondary token, you don't have to buy them, open a wallet, and understand how these two things work. Same way you go to today bank transaction, you don't have two different accounts to pay for a principal amount and then the commission. If we are able to build these tools, it makes everyone's life easy and users' life easy. But then on the other end, we have these super advanced crypto users and traders who will actually swap from one platform to another because they're able to have a, I don't know, marginally very small cost, or you will have large institutions who do frequency trading. They open 300 trades per second, and that minimal cost will actually save them a lot of money. And for these users, advanced users, I always believe that there should be an option that they can do whatever they want, and they need to have a clear visibility. Both these two things come hand in hand. And for example, at Bitget as an exchange today, you can go and trade on an exchange itself, but you can also access everything on chain. We call it Bitget on chain if you want to live fully on chain because whatever reason you have. In my opinion, having two options is very important, but also it's always better to have less abstraction that a beginner user who just onboarded to crypto, they don't have to know about you need to have two wallets, copy two addresses, go buy two assets in order to do one transaction. And this is the biggest problem that stays today with everyone, from BNB to Tron, all the large players that still run on the same system. And unfortunately, no one yet implemented a possibility that, except the third parties like us, that all your transaction costs actually could be taken from your principal amount, and you don't even have to hold a secondary account. I guess we are done here. Thank you very much, and I will be around if anyone has more questions.